Okay, folks, we're Thursday, the 8th of December, and happy Christmas to everybody. And I hope you all got me a Christmas present, or Jason. And yeah, I just thought it'd be a good time to jump on because what we've been hearing is recession, recession, recession. You open up your bag of cornflakes on the breakfast table and there's something there about recession coming. It's on the TV, it's on the radio. Your mum's talking to you about it. And guess what? You know, this market wants to go higher. I think we had a really good pullback over the past 5 days. Jason Shapiro, what do you think?
I couldn't agree more with everything. And I don't agree with anybody ever. But I couldn't agree more. I mean, I watch the TV all day and every single person that comes on there says the same exact thing. There is no debate, right? There might be a small debate as to whether the recession is going to be shallow or whether it's going to be deep, but it's guaranteed we're going into a recession, which, you know what, that's fine. But I don't trade. I don't know any contracts that I can trade that are based on GDP. You know, I trade the market. Can the market not go up if there's a recession? I mean, is that an impossible thing? I don't think so, especially when everybody knows recession's coming. I can make the debate that recession is not coming. I don't know if that's right or wrong, but you know, I think I saw an interview. My favorite thing about this is I saw an interview last week with a guy who was a CEO of, I don't know if it was MGM or one of the big casino operators. And he said, you know, we are preparing for recession, but as of yet, we have seen no signs of it. I think that's everything, right? And he says he has like 6 months out of bookings into his hotels in Vegas and all that. And he's like, you know, people can always obviously cancel their bookings, but we're seeing nothing but growth in bookings going 6 months out. So, but the fact that they're preparing for recession, people have to because everybody knows it's coming, right?
Yeah.
But what happens if you prepare for recession
and
it doesn't come? Now you've got to ramp up production, right? If you're cutting back on production, which is what I assume preparing for recession is, and then it doesn't come, and now you're behind and you have to ramp up, you get the opposite of recession, right?
Yeah.
That to me seems to be like what's going to happen here.
Don't those guys make a ton of cash in recessions? People just want more entertainment and dining out.
I think those guys make a ton of cash, you know.
Every day of the week. Yeah.
Right.
Yeah.
But I mean, that was just an example of one person. You know what I mean? You see every single person come on here, and that's the first thing they say. Like you said, everybody, you open up your cereal and there's a note in there, recession next year, right?
Yeah.
So if everybody knows it's coming, then how is there an edge? How is there an edge there in saying that? There cannot be an edge in saying that. So
I don't know what it means. You had technically you had 2 negative contracting quarters, was it, in the US, I think? And then the Fed just goes, well, that's not actually how we look at a recession, wasn't it? Wasn't that what you
Yes, it means nothing. It means these guys are bearish. That's what it means. It means these guys are bearish and they want to say recession because they're bearish the stock market. That, to me, that's what it means. You know, recession coming, the market's going to go down the first half of the year and rebound the second half of the year. I hear that every single day. Not every single day, 10 times a day.
Well, tell me this. What are you long, or what are you looking at? Sectors?
I'm long. For the most part, my biggest weighting here is I'm long the Dow.
The Dow?
Yeah, I'm long Dow.
Nice. I'm long Dow too, actually.
I think that's the trade.
Crude oil futures extend losses. Brent down by more than $1 a barrel.
It's all going to be the same thing, but I just happen to be long Dow because that's, for whatever reason, the one I like. But you know, the big thing is this trend line, right, on the S&P or whatever. You know, that's what everybody's trading, right? And you know, first it was the 200-day, which is what we talked about. I think last.
I thought I was the only one who could see that trend line.
Yeah, right. Exactly. So it's every single person in the world. And see, to me, I was thinking about it last night. A trend line, and people that trade trend lines and stuff are going to hate me for this, but I think that they are completely fabricated. I think they're a made up thing, you know, because you can't draw a trend line to 2 points because any 2 points you can draw a line, right?
Yeah.
So you have to draw a trend line to 3 points, right? That's a trend line, 3 points. And that's
Okay.
why that's why they always say the third point is the one that fails, because it's a completely made up line to begin with. So that's why it fails, right? And this is the third time we're hitting this so-called trend line, right?
Well,
And
if we hit it, yeah, it'll be the third test.
well, yeah, I think we hit it the other day, you know. But to me,
We got
it's going
close.
through that.
No, we got super close, but it was no cigar.
Yeah,
we didn't actually hit it. So
well, we're gonna hit it. You know, last time we were
I think
talking about the 200 day and how everybody was doubting that. I was watching when it went through the 200 day the other day. It sliced through the 200 day like it didn't even exist, right? And then it came back down and went back through it. Okay. I did the same thing with the 199 day or the 210 day. Like it's all just made up bullshit to me. So
we can this is the said trend here, is that right? We're looking at this.
Yeah, I guess that's the one. Yeah. So
yeah, we got the,
it's going through that. All that does to me is get people that want to make a trade like that short. And so when it goes through it, they're going to be so short when it goes through it that they're going to have to run and they're going to have to cover and it's going to rip. That's my best guess from here. I think it rips right through that thing. And when it does, it's going to be a freaking explosion.
Yeah.
Because so many people are shorting in front of that. Look, last time I was saying I was so bullish up to whatever it was, 41, 42, because the one guy, I was basing it on one guy who said that there was no chance it could ever get there, right? Well, that same guy is so bearish because of that trend line here. I can't even tell you. Every day he says the same thing, the same.
Yeah.
thing.
So we've been talking about this in our room, and I was just saying I had a story that's kind of equivalent to this on the DAX when I was with Geneva Trading, but we just been saying, like, listen, how many people are going to be selling the shit out of that trend? Well, more than half, I reckon. And what does that mean? Stops to run above. And
Absolutely.
what does the market love? It loves liquidity. And we had a meeting long time ago in a prop firm that I was in, and we had an analyst come in. I think it was like the DAX, I don't know, 8,000 or something, and the DAX had never traded here or at that point or something like that. And the analyst was like, there's going to be a wall of selling here. You got to be running with the pack. And the head of trading was like, okay, thanks, man. He left the meeting, and the head of trading was just like, we're going to buy the shit out of it when it gets up there. And sure enough, it flushed,
That's what I feel like is going to happen. And, as with everything, the question is what happens if I'm wrong? So I don't know where the exact wrong spot would be here, but
well, I
kind of think last night's low is pretty good, to tell you the truth. We had a little bit of a flush last night, and I kind of think last night's low is where I would be trading it against. I don't think that anything's happened. I mean, we kind of tested that line and we've pulled back this last week. To me, that's even better for the upside, because it's sort of confirming for these people that they should be shorting it, and it's just going to get them shorter. Nothing has happened to this point to me that says that this thing is not going to break that thing. So it's only a few times a year that I get sort of table pounding trades, and this kind of feels like one of them, but it's dangerous because that's where I'll get killed. But I won't get killed because I watch my risk. We take that last night's low, and I'll be out of 3/4 of my position anyway. So
you don't want to get married to it.
No,
the 39.27 is what we've been looking at, and it's been a beauty. I mean, yeah, it's like
39.27. Well, we're above that now, right?
Yeah, it's not a hard level you can trade against, but as a general area, we like it. And we've been looking at that for a month now, maybe since we got up there. I actually talked about this with you the last time. Yeah, once we popped over there on the was that Jerome? Oh no, that was the CPIs. And then we had Jerome, drive it a bit higher.
Yeah, the Jerome thing is what drove it through the 200 day.
Yeah.
And now we're below that, but yeah.
So now we're talking about the big whiz bang stuff to come. We got CPIs next Tuesday. We got FOMC Wednesday. We got a Senate hearing on the Monday for FTX. It's going to be a lot of popcorn events next week. What do you think? I'm pretty sure we're going to do 50 basis points, and the market is going to run. But
yeah, I mean, I don't know. But the market has a tendency to fuck me up and everybody else up. So I don't really know. To me, it feels like we're going to be right below. This is what I've been saying for a month or so. I feel like going into CPI and the Fed will probably be right below that trend line, right? So that you can't make a decision, right? If it were above it and it was breaking out, you could probably do something, right? But if we're hovering right below it, it makes it very tough to do anything. So I feel like that's where it will be. And then theoretically, that could be the juice that pops it above. Or it could be the juice that pulls it back again and gets people even more short. I don't know which one. I know which one I'm hoping for, because if the market doesn't go down from here, then I'm going to be long going into it. But it's hard. It's so heavily watched. These so heavily watched things are hard.
Yeah, I think the event FOMC is going to, whatever way it's going to be, right on the release on FOMC statement, I think it's going to provide us a huge buying opportunity, and it's going to look like the scariest selling you've ever seen.
Yeah,
and I think the market's going to shock to the downside, and then it's going to be where's the rest of the buy or the sellers, and then there'll be a pause, and then I think people just lift the shit out of it, and then we go to run the stops.
That makes sense. That's probably what makes it the hardest way to go, and that's usually what happens. The hardest thing is usually the one that works, right?
Yeah.
So to buy that dip into that would be very, very hard to do.
It can be scary. It can be scary. I think we had one there a couple of days ago. We had a pretty scary flush to the downside. But needless to say, so I wanted to tap into your sage, salty sea dog experience here. All right. So I've been trading about coming on 17 years equities and futures in total, 7 years on futures. But I kind of don't think I've ever seen a bear market. So what if we do go into a bear market? What if we're wrong? The trend holds. I mean, a lot of people say, well, it's a terrible time to be a trader. I would argue with that, I think, but I don't know. What like, could you talk a bit about your experience of the last bear market trend that was really sustained?
I mean, when has there ever been in our lifetime a sustained bear market? There's been bear markets. Well, I mean, Japan is the one, right? Which I don't trade, but Japan is the high in Japan was 1989.
89. Yeah.
We're in 2022 now. We're still 30% below the highs.
Right.
So that's what a bear market looks like. I don't think that it's bad to be a trader in a bear market. It's going to be bad for me next week if the thing goes straight down. But overall, bear markets offer great opportunities because they have, even the Nikkei had 50, 60, 70% rips in that time period, right?
Right.
So, and if you can catch it short, markets have a tendency to go down a lot quicker than they go up. So bear markets offer great opportunities, but you better be on it because it's a hell of a lot harder, obviously, than a bull market.
Yeah.
And I do believe that we are in a long-term bear market, by the way. As bullish as I may be at this particular second, I am a big believer that this market in 10 years is not going to be higher than where we are now.
Okay.
I think it's almost impossible, frankly.
And what are you putting that down to? What are the big headwinds there?
You had more inflows into the stock market by retail investors in 21 and 22, for that matter, than you've had in the 30 previous years combined. So that, to me, that's not money that earns positive returns over time. So if they're not going to earn positive returns over time, then that means the market is not going up over time. That's really what I base it all on. You know, it's all just this flow and who the people that are putting money in are, right? That these people don't earn positive returns over time. So, and they've piled money into the market. Now, you could argue they're in the wrong things. You know, they piled money obviously into, you know, Carvana and, you know, whatever else, Kathy Wood and the NASDAQ, and which was the right place to do it. If you did it 30 years ago, that was all the outperformers, right? And it seems to me that's where they're still piling money into, because it's the classic thing where people like to trade the last bull market, right? So they're piling money. People are like, oh, they're piling so much money. And I go, how much of that money is going into the Dow and how much of that money is going into the DAX? Okay. I would argue zero, right? It's all going into NASDAQ stocks because that's what they're used to. That's what worked for 40 years or whatever. And that's where they think the money is. But that was the last bull market, right? So that's not going to be what works this time, right? I mean, the bull market up into 2008, really, if you look, the big beneficiary of all that was the banks, you know, and then 08 hit, everything came down. And then from 09, everything's rebounded. But you know what hasn't rebounded? The banks. Look at Citibank. You know, I mean, it hasn't gone anywhere in 15 years, right? Those stocks were up like 30 times up to 2007, 2008. And they never rebounded because that was the last bull market. And then the tech took over and that was this bull market. And now whatever happens next is not going to be tech to me, right? These are not the stocks that you want to be playing. How many people really out there own these Dow Jones stocks, you know, Dow Jones Industrial Average stocks? They're boring, you know, they're for grandmas and they all own tech. So
yeah, but they pay dividends. They have growth and they have dividends, man. And no, but I suppose no one wants to hear about dividends. They want to hear about, like, you know, 20% up days.
That's what they want. That's what they want, and they're not going to get them. So anyway, I am a big believer that yes, this is going to be a long, drawn out bear market, which offers some pretty good squeezes. And I think it will resume. First thing that has to happen for me, at least, is we need to break out of this trend line that everybody's looking at.
Yeah.
Which will get some of the bears out. And then we need to give up on this recession idea, which will get the rest of the bears out. And once that's out, I will be selling and getting short with abandon. And I can't wait. But whether that's, I mean, even if we broke out on the CPI next week and all that, I don't really think that's I'd love it to be just that.
I think it's going to be interesting.
But I got a feeling it's going to take longer than that. I got a feeling this is going to be like a 2 to 4 month thing.
As even though, you know, inflation is dead now, blah, blah, blah. But like, I just don't really know what the catalyst will be to have a really big run above that trend. Like, I mean, obviously flushing out a lot of short hands.
That's it. To me, that's always a catalyst. So,
but then I don't really know, for a sustained run. No, I think it'll set up for a really nice short then, maybe a week later. I don't know.
Yeah, it might be a week. You know, I don't know. I'll see based on how people react to it. You know, I mean, you have to think, although I've seen guys not do it, but people who consider themselves technical analysts, if that trend line breaks, you have to think they have to get bullish there, right? You have to. If you're just doing technical analysis and that trend line breaks, and you're not bullish, then you can't, as far as I'm concerned, you're not a technical analyst. You're full of shit, okay? And you could be bullish up there and be wrong, and that's fine, but you can't tell me if it breaks through that trend line that you're not going to get bullish if you're doing technical analysis. I just don't know what else you're looking at. But they come up with other stuff because they say they're technical analysts, but what they are is bearish. So they'll come up with something else. Oh, the breadth isn't good, or the whatever the hell else, you know what I mean? I watch this guy and he's like,
you can write the headline already. you know, the day it breaks above, market shocks to the upside is they'll talk about liquidity or fucking
algos, bro. It's all algos.
Algos stop run through the highs. Yeah,
that's what they say. Well, I don't know. I can't trade against these algos. No, you can't trade for shit, dude. That's your problem. Okay, has nothing to do with algos. I was reading this great book called How We Win or Lose, which was written in the 30s about the market, and it wasn't written by a market guy. It was written by this really good just writer who went and fooled around in the market for a couple of years and wrote a book about it. And his conclusion was the only way to really make money in the market is to do the opposite of, you know, what everybody says to do. That was his conclusion, right? And he was talking about how all these guys used to blame the manipulation on the pools. That's what they used to call them back then, the pools, right?
Yeah.
And I'm like, you could rewrite this book today and just change that word pools to algos. It would be the same exact thing, you know? Blame the pools or blame whoever the fuck you want, man. But
I know,
bottom line is, if you're losing money, you're losing money, man. Like, you know, excuses don't cut it in this business.
That is a famous one. When you have some crazy as shit spike or something, they're like, oh, it's an algo spike, blah, blah, blah. It's like, no, somebody shit the bed and sold everything they had at market, and it flushed the whole book down. Like,
it's only an algo spike when it goes against you. That's what it's an algo spike with these guys, right? It's always an algo spike. That's their reasoning for everything that goes against them. Is the algos. So we'll see what happens. Hopefully it breaks through that thing, because that will give us a hell of a lot more better information as to whether people are going to get bullish or not. Right now, to me, they're just way too bearish. Way too bearish.
I've seen,
and I'm the biggest bear in the world, by the way. Okay. I think that the market is going nowhere for a decade at least. Okay. So I'm the biggest bear in the world. But right now, I keep saying people are too bearish short term and not enough bearish long term. You know, even the bears are like, oh yeah, I could see the S&P testing that low, or maybe going down to 3,200. I'm like, you're not even going to be right about that, because when it does, it's going down to about 1,200. So,
well, this kind of brings something in that, you know, we were talking about before we came on here, but you know, you had a video talking about day trading, and you don't really recommend it. You know, a lot of these guys aren't around anymore. And, you know, something that I've seen with these sort of trend breaks is that you get a break, and especially on the daily bars or weekly bars, you get the break, and then the market kind of pulls back to the break area on the far side of the trend. And then it kind of just like stuns and goes sideways for, like, you know, 3 days, 4 days. But like, I don't know, what I'm trying to get at is, you know, how would you recommend to people to become less day trading and more on the swing trading? I mean, for me, it definitely comes down to having a superior edge, you know, not trying to,
you know, it's hard. And it's hard for me. Look, I have a process that I trade and I stick very closely to it, but it's still even hard for me. I'm sitting here all day watching these markets, and sometimes I think I see something and, gee, maybe I can trade around this position, right? And it works. And that's the worst thing, is when it works, because then I think I know what I'm doing, and over time it doesn't work. The easiest way to switch is to look at your P&L. You know what I mean? Because I'm telling you right now, without knowing who you are or what your P&L may or may not look like, if you really take an honest look at your P&L and find out where you made money and where you lost money, I would almost guarantee that where you're losing money is in your day trading over time. It doesn't mean that you don't make some good day trades once in a while. We all do, right? But over time, I would be willing to bet, if you really take a good hard look at your P&L, you're losing money in your day trading. And if you care about making money, then that's how you stop doing it. Because you say, gee, I'm losing money doing this, so why the hell would I do it, right? I do it. I went through a thing where I was really good. If I was long something, right? I was really good at trading around it, in that I would get out of it. Okay, I'd buy something at 100, right? I'd get out of it at 130. It would pull back to 120. I was really good at that. But by the time I got re-long, it was 135. So was that getting me anywhere? I sold it at 130. I watched it go to 120. I bought it back at 135. Net is I lost $5. Like, okay, I saved $10 for a little bit, and that was great. But the net of it all was that I lost money. So I just stopped doing it. I'll take that $10 loss temporarily, because over time I will make more, right? So, and that took me a long time to get around. But again, it was just an examination of my trading and an examination of my P&L and where it was coming from that got me to that place, you know?
Yeah. I mean, your experience day trading and then switching to, swinging positions and whatnot. I mean, it makes me think about, there was a study done there very recently about like all these big major funds, and their average hold time was less than 24 hours. And like most of the world looks at these funds, like, I don't know, like pick any of them, right? And you think, wow, these guys, must be doing some pretty sophisticated shit. They're picking the low of the year and they're selling the high, and they're holding long for a whole quarter and short for a whole quarter or half a year. And then the report is like most of them are in and out in 24 hours. I mean,
yeah, they're doing sophisticated shit. There's no difference. I've always made this argument, and I've known how many guys that work at hedge funds. You know what I mean? I've been in this business for however many years, right? There's no difference between Joe sitting at home trading and some guy working at whatever hedge fund. There's zero difference, right? Except that this guy happened to get that job. Okay, he went to Harvard or whatever it was, and he got that job, right? But otherwise, there's zero difference. They don't do it. There are some people maybe that do some more sophisticated stuff, but I mean, I have people on my Discord chat, none of whom work for hedge funds and all that put together all kinds of algo stuff and really interesting stuff, and they don't work at no hedge fund. You know what I mean? Because they couldn't get that job or whatever. I mean, there's people that do all kinds of stuff. The stuff that you have available to you, is basically free. If you can do math and you can do statistics, which isn't that hard, and you can program, then you can put together anything that those other people can do,
Sure.
So I don't think that anything that those guys do is, I mean, look at Tiger Global. They were the biggest geniuses there were. Well, it turned out they were just doing what everybody else was doing. They were riding the liquidity wave. Now, they were able, because of their structure, they were able to go to their prime brokers and get a huge amount of leverage, right? So they were able to ride the liquidity wave like nobody else, right? But just like your typical person that got involved in the market after COVID, that liquidity wave went away and they lost 70% of their money. So Tiger Global was supposed to be the greatest, most sophisticated people there were. And what did they do? They did shit. They got destroyed, right? So I don't think there's any more sophistication,
LTCM, smartest guys in the world.
I just did a video about the whole LTCM thing. I don't know if you saw that, but
I did. I saw that. Yeah. I mean, there was actually a story that we were told in Geneva about one of the guys who was super short on the Swissy, and he was like, I think he had a 250,000 position short the day they lifted it.
Yeah.
I don't know if I should be telling this story, but well, there's no names. But anyway, they decided to hold the position, and they got locked. They got locked in for 2 days. On the third day, they could have gotten out, and they held it.
Yeah,
and it wiped them all out. Well, it wiped the particular trader out. Obviously, it didn't affect the firm, but
see, if they had just been looking at the commitments of trader data, they never would have had that trade on.
Should have called you.
Like literally, if they were just looking at positioning data, they never would have had that trade on.
It sounded like a nightmare, an absolute nightmare. And I've seen the charts as well. It's like, but the decision to hold it, I was like amazed by that. I was like, Jesus.
I mean, Christ, at that point, it's like, what the hell?
Yeah, exactly. Hey, well, it's this bad. How bad could it get, right? I mean,
and they found out.
In for a penny, in for a pound, right?
Exactly. So, I mean, I just blew out. So if I blew out by another 20%, what's the difference, right?
Exactly.
But if they had just held it for the next 3 months, it would have come right back for them.
Well, you know, geez, yeah. Look, if I held every trade I ever made for 3
True.
months, it
That's
always
true.
every one of them would have come on side, right?
That's
You know?
true. If you hold anything long enough, it works, right?
Exactly, man.
And
Listen,
that's where leverage comes in, actually, because if you're too levered, then you can't do that. So
yeah, amen to that. Yeah, that's dangerous. So listen, we're gonna wait for 43s, are we? Who was that guy who quoted 43s? Because I'm starting to like the sound of that guy.
oh, you can watch him every day on Twitter, dude. Dan Nathan.
Dan Nathan.
Him
Okay.
and his boy Guy Adami, they're CNBC boys, and then they do their own little like Twitter thing, whatever blog, whatever you call those things, and they do it
Right.
every day. And it's a little, I got to tell you, I listen to it every day. It's about a half an hour. It's a little irritating because they're both so freaking irritating, and his voice is so irritating. You know, he's so pompous and he's so cocksure, and it's like, dude, I've been watching you for 10 years. You're one of the worst freaking market people I've ever seen in my life. Okay. And you're so pompous. But that's what I like, you know. I like that because that's all I really do. Like I always say, I'm not that smart, man. So I'm really just looking for stupid people to fade. That's all I'm trying to do. I'm not smart enough to figure it out for myself. So I'm just a vulture on other people. So he's a perfect kind of vulture. So you can go check him out, Dan Nathan. I think his thing is I'm like sitting here. I'm sitting here advertising him.
Yeah.
I think it's called Risk Reversal or something like that.
Okay, I'll check it out. Yeah. All right. Brilliant.
Oh yeah, he gives a thing every day. But yeah, I can tell you what he's saying. He's bearish. That's the story.
Oh, he's bearish. Was he not quoting the pullback to 43s?
He was the one that was saying that there's no way we will ever get to 4,200 on the S&P.
Oh, sorry. Yeah. Okay. Yeah.
And now he's saying, you know, you got to sell it against that trend line. And he's saying that on a fundamental basis, you know, people are buying stocks because interest rates have come down, but eventually they're going to realize the reason interest rates are coming down is because of, hit me,
the algos.
Recession, bro.
Oh, the recessions.
Yes.
Sorry, I was looking at the 42 in the chart there. Yeah, recession.
Yeah, so eventually people will realize the reason rates are coming down is because of recession, and then they will resell stocks and we're going to go to new lows. That's his mantra, and I'm waiting for it to end so that I can start getting short. And just as an aside, and this is no bullshit, you can go back and look at my newsletters that I write every week where I said it. You can go back and search his videos. But the day the stock market hit its high, and this guy was bearish. This guy's been bearish since the financial crisis in 08. Okay. He came out in November of 2021 and he said the Russell chart is breaking out to the upside and he wants to get long. That was in November of 2021, bro. It was the dead ass high of the entire bull market. And it may be the first time I've ever heard this guy make a bullish comment. And I said it right in my newsletter. We had it all over the Discord. We had everybody on my chat site, everybody getting short there. Everyone getting short. We're getting everybody short there. I was like, Dad Nathan just got bullish, dude, on this Russell breakout. And you can look at the Russell chart. It was a breakout. It failed as a breakout, but you know, so this dude has a great history. And it's not that he's not right sometimes. Everybody's right sometimes, right? But he is wrong and wrong big over time. So it's definitely, if you're into that type of thing, you know, most people are trying to find the smart guy. I can't find that guy because that guy's not talking to me. So I like to look for the dumb guy. So if you're into like looking for the dumb guy and fading him, this is a great person to do it with.
Well, I think those guys are kind of too busy trading and they don't really need a squawk box, you know. I don't think they need a
they don't.
box.
No, Stanley Druckenmiller is not getting on freaking, you know, getting on Twitter every day and telling us, you know, what he's doing.
I don't think he's tuning into Mad Money every night.
No, he's not paying attention.
He's not a big man for Twitter.
No, so you know,
a fellow
I can't find those people. So you know, but you can find, you know, the guys who are wrong a lot. So
okay, I'm calling it here. We're gonna, when we hit 42s, I'm gonna call you.
When we hit 42s,
we're gonna have a party. Yeah, we're gonna hit 42s. I don't know when, but I think it's going to happen. It could
I mean,
happen before the end of the
I'm hoping
year.
for more like 46ers, but yeah, we'll see.
Yeah. Well, yeah. 42s it is. I think we're going to break this trend. It's going to be interesting. Next week, big week. Yeah. All right. Well, thanks for tuning in. Thanks for coming on for a call.
Yeah, always fun.
All right, man. We'll talk to you soon.
Great. Have a good one.
You too. Bye-bye.